About QFS, NESARA, GESARA and Pi Network Bell. QFS, Quantum Financial System, a system that changes the overall financial management procedures involving banks and other financial institutions. QFS is a combination of computer technology, AI, artificial intelligence, physics and mathematics, combined with the use of blockchain so that it will always produce unlimited innovation. NESARA, GESARA. Legislative proposals that aim to transform the global financial system and promote economic prosperity for everyone around the world. The main objectives of NESARA, GESARA are to achieve economic prosperity, social justice, a better living environment, eradication of corruption, global economic growth and enhancing international collaboration. NESARA, National Economic Security and Recovery Act, will be implemented in the United States. GESARA, Global Economic Security and Recovery Act, will be implemented globally. Based on the brief explanation above, will Pi Network be integrated with QFS in the future and play a role in achieving the goals of NESARA, GESARA? If we study the Pi Network white paper and understand its vision and mission, it's very likely that this will happen. As Dr. Nicholas said, Pi Network is here to provide various solutions that we have never experienced before. The question that continues to arise every day is, how is Pi worth? The world needs Pi, so its value will be huge. Dear pioneers, welcome to a strategic look at the three-stage frustration scenario, a forward-looking analysis of how Pi Network could reshape global finance. This is a predictive exploration, not a guaranteed outcome, but it highlights why Pi's design may leave governments and corporations scrambling to catch up. 1. The first frustration: open-source transparency. Imagine the moment Pi's grand open mainnet code is released to the world. Regulators, central banks, and large financial institutions rush to inspect every line, expecting to find the usual loopholes that traditional blockchains have: hidden anonymity layers, weak know-your-customer practices, or ways to sidestep anti-money laundering laws. Instead, they discover something unexpected. Pi's architecture is built with regulatory-friendly compliance from the ground up: integrated AI for real-time risk monitoring, strict KYC and AML verification, and compatibility with global frameworks like GDPR, PSD2, and FATF standards. The reaction? Frustration, the typical shortcuts of exploiting code weaknesses simply don't exist. Governments cannot dismiss Pi as a shadow network because it already aligns with their own compliance requirements, yet it remains outside their control. This is the first shock: open-source proof of a fully transparent, real-name blockchain that cannot be undermined. *********2. The second frustration: the tokenization race. Next comes the global race to tokenize real-world assets. As Pi's ecosystem expands, it deploys a multi-collateralized stability mechanism backed by a diversified reserve: USD, BTC, ETH, gold, silver, green bonds, real estate, and even emerging categories such as quantum or space-based assets. Governments and multinational corporations quickly realize the stakes. They accelerate their own tokenization programs for property, commodities, and sovereign bonds, hoping to maintain influence. But Pi has already reached hundreds of millions of verified users and built deep liquidity and trust. Here lies the second frustration: speed and scale. No matter how fast they move, legacy players can't close the gap. Pi becomes the default global standard for asset-backed digital value before traditional actors even complete their pilot programs. Their chase only underscores Pi's early mover advantage. *****. ###3. The third frustration: collateral ratio 5.0. The final stage is the most disruptive. Pi Nexus constants establish a collateral ratio of 5.0 meaning that borrowing 1 unit of Pi liquidity requires pledging assets worth 5 times that value. Suddenly, sovereign states and large corporations seeking Pi liquidity must over-collateralize their own reserves. Pi stops being just a currency and becomes a superior credit unit effectively stronger than the national or corporate balance sheets attempting to tap it. This is the asterisk credit reversal asterisk. Governments and corporations find themselves borrowing from a people-driven network. The traditional hierarchy of money and credit flips, ushering in the third and deepest wave of frustration. Strategic implications. The victory of individuals. Through these three stages, Pi returns financial power to everyday participants. Asterisk individuals as issuers. Asterisk pioneers receive rewards for labor and contribution rather than speculation. Asterisk community wealth. Asterisk decentralized autonomous organizations, DAOs, and staking, potentially offering annual yields, allow collective growth. Asterisk institutional humility. Asterisk states and corporations no longer dictate monetary rules, they must integrate with Pi on community terms. This is not just a technological evolution, it is a philosophical shift where asterisk people become the backbone of global liquidity. Conclusion. A people-driven financial infrastructure. Summarize the journey. 1. Open source audit right-pointing arrows shortcuts blocked. Asterisk. 2. Asset tokenization right-pointing arrow institutions can't catch up. Asterisk. 3. Collateral ratio 5.0 right-pointing arrow credit hierarchy reversed. Asterisk. Each frustration reinforces Pi's legitimacy. The more traditional finance resists, the stronger the network's credibility grows. Dear pioneers, whether this scenario unfolds exactly as described or in a different form, it underscores a key insight. True financial innovation isn't about speculation, it's about trust, participation, and resilience. Pi's path, built on those constants, positions individuals and communities at the very center of tomorrow's economy.